Stock of the day though, after having spent a few days in Perth at the Resources Technology Conference, probably learnt more about mining than I ever thought I needed to know, but it was just a sensational conference and how technology is changing the landscape for our miners. Thought we'd take a look at Rio today after Citi came out and sees a sharp increase in Rio's earnings, excluding Pilbara Region's operation in the next 3 years. Citi expects the earnings ex-Pilbara to reach around $4 billion per half, compared to $1.3 billion in the second half of calendar year 2022. The broker maintains its rating at neutral as it feels iron ore prices will soften in the second half of this calendar year, and it keeps a price target of $120. Mark Gardner, how do you see Rio at the moment? Iron ore prices dropping, but their production is increasing significantly.
Yeah, we just had about 15 minutes ago the manufacturing PMI in China, which was actually a pretty positive number for the first time in a while. So this China recovery we've been waiting for 6 months now actually might be real, potentially. Well, I mean, one figure doesn't necessarily form a trend, but the numbers over there have been lagging. But at the moment, I think these iron ore miners, particularly the iron ore price, obviously bounced pretty significantly out of that December low. It is sitting on pretty critical support at the moment, and I sort of feel like these big, the big miners and the iron ore miners, the only thing really holding them up there is that iron ore price, and if it does break to the downside, we'll probably see prices pull back quite a bit. And when these things go on a run outside, or this far away from dividend, or another dividend, then you can see some pretty significant moves. But BHP, I mean, whilst I do agree with that analysis, they are looking to diversify, but I mean they're a little bit late to the party. I think. Has
Rio got the diversification that BHP's got? Is that the thing?
No, they're mainly iron ore and aluminium. I think they're 10% each in copper and various minerals, whereas BHP's 47% iron ore, 26% copper.
Right.
I very much like that copper exposure. They got some of the best, best deposits globally as well. That potash project that's going on in Canada is 9,000 square kilometres, which is absolutely massive. That's coming online, I think, 2025 or 26, but last check was under budget and ahead of schedule sort of thing. So not by much, but reliable BHP. They know how to get things done. So. And that's going to have anywhere up to like $1.5 billion worth of revenue potentially in the first year. It's only costing them about 1.6 to build. So, it's obviously a pretty good asset. And look, that moves away from those chemical-based fertilisers, being potash, which I think's which will obviously be, we're going to need. We're still overpopulated, even though there's some slowing birth rates in some of the bigger countries. So. But my only thing with Rio, I tend to agree with that analysis, and I think Rio will be a better company in a year or two with that added diversification. However, I'm very wary of buying cyclicals at the top of ranges into potential slowing.
So Rio not for you.
Just across the board, I wouldn't be buying Rio. BHP.
I was going to say, is BHP?
I'd be selling option? This at the moment, and then if I was when I'm getting back in, I'm getting back into BHP more than likely. Obviously, depending on price. But yeah, it is just with that copper exposure and just not being so heavily reliant on.
So sell Rio, and would you sell BHP?
I wouldn't sell BHP. I wouldn't necessarily. Yeah, it has. We've sold BHP. Earlier in the year, around the $48 to $49. Some clients who are super keen on it, they just wanted to get back in for some. So there's been a small nibble from some clients, but I'm pretty happy at the moment, just waiting on the sidelines.
Okay, so BHP, Rio, Fortescue, even MinRes, you wouldn't be looking at at all?
I'm just willing to be patient, right? Because I think if we do get a soft landing. I'd rather miss a first part of the move and be sure. But you're seeing those economic numbers in the US soften at the moment, and they are they're the biggest consumer in the world. So I don't feel the need with Fed saying higher for longer, numbers softening, and the amount of uncertainty that I need to be buying cyclicals at this level.
Daniel, what do you think of Rio, and on that iron ore price? I think I saw a chart from Carl Capelinga from Think Markets the other day, basically reinforcing what Mark was saying. It's at a critical level, likely to break down to the lower side after a pretty good run.
Yeah, we're probably a little bit more bearish on iron ore prices as well, mainly from a supply side point of view. So that's probably, you can tell what our opinions on Rio would be just from that statement. But the blessing and the curse of Rio Tinto is that it's such a large and complex business. And to give management credit, probably the last 12 months, they're actually starting to hit a bit of a purple patch, particularly as they improve efficiency in the shipments. So they had a big bottleneck issue in their shipments in iron ore, but it's just not the right point in the cycle. So I think this is one that you should actually pay a bit closer attention to. Last 5-10 years, they've really struggled to maintain even the midpoint of their shipments guidance, which has been the reason why everyone says you'd always just buy BHP. But that narrative might be changing over the next 12 months, particularly depending on how their Pilbara division goes. So something to watch there, but not the right point in the cycle for us. We'd probably be happy to take some profits and sell. Right.
And same with the BHPs and Fortescues and Minres?
Yeah, well, Fortescue I'd probably put the biggest sell on. The reason for that is something that the market probably isn't focusing enough on is price realization. So when you've got very low margins in steel manufacturing, Chinese blast furnace want to actually purchase the lowest quality iron ore to save on their costs because they're not making any profit. What that means is Fortescue gets the biggest bump because they have the lowest grade. So the price utilization and realization is so high at the moment, that needs to come down, and that will be an even bigger downgrade. So we're more than happy to move on from Fortescue.
Okay. All right.